Now let's understand what is the concept of return. For investor, prime interest in investment is largely to earn a return on their money. That's the prime motive or objective of any investor. Return is a principal reward in the investment process, and it provides the basis to investors in comparing alternative investment opportunities. So how do you know where exactly to invest? What you're going to do is you're going to see what is the historical data of the return that each investment opportunity provides to you. This could be your basis of deciding what investment opportunity actually you want to adapt. Measuring historical return allows the investor to assess how well they have done, and it plays a part in the estimation of future estimated returns or unknown returns. So basically returns will be of two categories. One is your realized return and second is your expected return. Now let's see what is realized return and what is expected return. So realized return is after the fact return. Return that has been earned or was supposed to be earned or could have been earned. Realized return is a history. Now, in case you have earned the return, you know what it is. But in case you could have earned it, but you didn't invest into that investment opportunity, this is called your opportunity cost. Now, what is expected return? Expected return is the return from asset that investors anticipate they will earn over some future period. It is a predicted return and it may or may not occur. Now, if your actual return is more than the expected return, that means your investment has done well. If your actual return is less than your expected return, then your investment option or opportunity has not done well. There comes the risk factor into picture of investment. But before we go to risk, now we are going to see how to calculate the average return.